Welcome to the Millionaire Mindcast, where we broadcast weekly interviews with millionaire minds from across the globe to empower you on your journey of unlocking a rich and fulfilling life. It's time to unleash your millionaire within. Now, here's your host, Matty A.
What's going on, you guys? Welcome into another Wealth Building Wednesday. We got a great update for you guys on everything that is going on in the markets right now, how it's going to impact real estate, how it's just impacting life in general. So we're excited to be back with you guys for another episode. As always, I got my co-host here, Mr. Breedwell. How we doing, brother?
Good. What's up, guys? Hope you guys are staying well. Hope the families are doing good. For everybody that's affected by this from a work standpoint, we feel for you. If we can be of any resource to you guys, please don't hesitate to reach out. I've had a ton of people reaching out to me, asking me questions, emails, text, calls, DMs. Please do not hesitate. We are here to help.
You have been an amazing resource, just selfishly, personally, for me through all of this, which has been amazing. All I know is when you're around advised counsel who is in the know and has a lot of data and resources to back it up, it makes you sleep a little bit better at night when you're thinking about your finances. So thank you, Mr. Breedwell, for being on my team, brother.
You're welcome.
So for those of you that are new to the podcast, you haven't checked out our monthly contest and giveaway, all you have to do is head over to go.millionairemindcast.com if you want more information on our upcoming Wealth Camp events. 5-star world-class experiences, intimate groups, wealth workshops to help you in your march to $1 million and beyond. Keep more of your money. Obviously, protect your assets, grow your assets, your passive income, your net worth, while having a whole hell of a lot of fun doing it. You can learn more about our Wealth Camp experiences by texting the word Wealth Camp to 844-447-1555, or just head over to therichlifeacademy.com for more information on that, as well as many other resources, coaching, content available for you guys, richlifeacademy.com. And guess what, dude?
What?
We are hosting all of these videos now on YouTube. So they can actually see your face made for radio.
Oh, my goodness. I shaved yesterday, so we're
Dude,
we're
I
good.
shaved too. I haven't shaved in quite some time. I can't get my hair cut right now, so I decided I'm going to at least shave and put on a sport coat and act like I'm still professional in some capacity.
Yeah, it sucks. Can't get your hair cut.
I know, right? So if you guys aren't subscribed to the YouTube channel yet, Monday interviews, Wednesday episodes with Ryan and I, and my Friday solo, Friday Food for Thoughts are all now on the YouTube channel. Just type in Millionaire Mindcast. Check out some of our episodes. If you're not subscribed, subscribe. If you get any value whatsoever from the podcast, all we ask is one of two things. Share it with somebody that can gain some value from it too, or leave a review. This is how we continue to spread this free content around. So with that being said, you know we talk about all things mindset and money on this show, and I know a lot of people are focused on what's going on with their money right now.
As you should be. It's always a good idea. You know, one thing that we send weekly reports to our clients. That way they at least, because a lot of the times you don't get anything but quarterly reports, and then what happens is people are aggressively checking on their money. That can lead to some emotional decisions. So
For sure.
You do want to be checking on your money. The thing that you definitely don't want to do is if your money is down, unless there's a plan for tax purposes, you don't really want to sell when your money is down.
Got to write it out. Write it out.
Yeah, those values, just like when you have a bunch of real estate, your net worth is just on paper until you sell the real estate and you realize the capital gains, if there are any. Same with investing. You know, you should still own the same quantity of securities purchased. So selling at that low value is only going to essentially do you harm. You're going to realize that loss. Versus, I know that a lot of you guys were here during the 2008 financial crisis. I know me and you were. And many of you, the dot-com bust earlier in the early 2000s, and we're all here today. So that will, give you some hindsight to tell you that even though when times look dim as they may, I was saying to my buddy Jack Cancel, the night is always darkest before the sunrise. I'm not sure who said that, and it may not be the exact quote, but things
Sounds like an Earl Nightingale quote or some very smart author.
Earl Nightingale said. But really, things tend to get really rough and rugged before they normally pan themselves out. And adverse situations always present themselves to successful people, and successful people strive through them and end up coming out better than they were when they started. So I would encourage you guys that if you have questions, you have a resource in me, you have a resource in Matt. But the main thing to do is, and we've talked about this many podcasts ago, you always have to have a plan. You have to make sure that you stick to your plan, and you have a set of principles and rules that you follow as a guideline. If you don't have that, there is no plan in place. You're just running and gunning, and that's not really going to get you anywhere too quickly. So having a plan with your real estate portfolio, having a plan with your investment portfolio, having a plan what to do with what investments, how they're going to complement each other, what your cash doing, making sure your cash is working for you, all of those things. And so that's kind of what you focus on, rather than my money is down, so I'm going to be emotionally attached to my money.
Well, especially right now when you have nothing but time and space to
educate yourself, learn.
Yeah, right. And it's, what are you focusing on right now? Because if you're focusing on all the things that are really out of your control, and the news and the markets, spinning and up and down, riding that emotional roller coaster is going to be a pretty rough journey at this stage of the game, right? But if you can at least remove yourself from that emotional roller coaster and logically, attack your days with either skilling up on something, educating yourself in some way, connecting with a new person or resource that can serve you, support your goals, allow you to kind of continue to move the needle forward on the things that you want to be working on. That's really where I'm spending a lot of my time. We've talked a little bit about this. This is separation season. You know, my Q2 theme, I always come up with a theme, and for me it's separation season, because the people that are putting in the work right now, the people that are staying positive, surrounding themselves with people that are being proactive, that are, doing things instead of just sitting back watching Netflix, chilling. Mind you, I did get through Tiger King.
I did some of that.
That was some good shit.
Tiger King is amazing.
But
new
at the
episode
end of
coming out, by the way.
I know, right? The other thing, though, is, if I continue to double down when everybody else is pulling back, and again, I'm not saying double down and like, hey, put more money into the market right now, or hey, go do. No, I'm talking about skilling up. I'm talking about pushing into your resources or your database, making
sharpening
extra
your
calls.
sword.
Yeah, doing the things that are going to serve you coming out of this. This is where the people who are taking a step back and losing ground you're going to separate yourself from that pack. But what you do over these next 30, 60, 90 days is going to be very telling as to where you're going to come out on the chessboard once all the dust settles. Because a lot of people you're going to have seen 30 days ago, before COVID had really hit and had its impact, versus where once the dust settles, everybody's going to be at after this 30, 60, 90 days. The landscape's going to look different. It's kind of that reset button, that equalizer in many capacities of life and business. And so if you're not using this time strategically right now, you should really reconsider. You should really look yourself in the mirror and go, what should I be doing right now to make sure I'm achieving my goals? And sitting back and waiting for this to pass right now, in my opinion, isn't going to be what gives you an edge coming out of this.
Yeah, I agree. I mean, you're just going to be the same person. You're going to be back where you were when this started versus, anybody and everybody that's taken the time, like Matt's saying, to do something, be proactive. They're going to be all the way up here, and you're going to now just be picking up the ball while they've been kicking it down the road this whole time. So, absolutely, either educate yourself, master your craft. I'm spending a lot of time educating myself on areas that are extremely dry, stuff I don't have time to normally go into, quantitative analysts and stuff like that, talking to our analysts, going over our portfolios, rebuilding some of the portfolio. I'm doing the little things that I need to do to sharpen my sword. So definitely not being stagnant, because stagnation is the ultimate killer of success.
Yeah, I was on a call with Jeff Hoffman, billionaire founder of Priceline, last week, and one of the things that he said is, you got to be okay with the fact that industries, jobs, lifestyle, sectors of the world and business as you knew it 30 days ago will never be the same. life, business, the global economy pre-COVID versus post-COVID is just going to be different, and that's okay. That's part of the world and the economy and the cycles of evolution that we've all gone through anyways. We're innovators, we're adapters, and there's going to be a lot of businesses and opportunities and sectors that are birthed out of this. There's going to be people that pivot and adapt and forward their career or transition their journey in some capacity, and then there's going to be people that completely die off. So you just have to be willing to change with the changing landscape, and that's okay, right? And obviously there's a lot of stuff changing right now. What did we see in the market this last week?
Last week, this is
today it is March.
March, yeah, exactly.
It is April 7th as we record this today.
Okay, so last week, this is Tuesday, April 7th. Last week, the market pulled back slightly late week, 4 to 5%, I believe. And that was after we had horrid unemployment reports come out.
So as of last episode of Wealth Building Wednesday, you said, hey, pay attention to unemployment numbers. If they come out much higher, the market is going to correct downwards. If they come out in line with where they expected it to be and it was already baked into the market, then it might stay the same.
And then C happened.
And what did we see?
We had unemployment numbers come out that were higher. The market didn't do anything and then went up again. And then for some reason, when we had good data come out, the market went down. So very weird.
What do you make of that, though?
It's just, I don't know. It's not, still figuring it out. But moving forward, what happened over the weekend was we had some good news from the Trump administration about the virus, kind of that moving the ball down the road, getting a vaccine going, so on and so forth. That skyrocketed the futures market on Sunday night, and then Monday market open. We had a huge day, the third highest point gain ever, not percentage, point gain.
What's the difference there for people that don't know?
Well, it's just the number of points. So the Dow went up by 1,300 points. That could be 1%. So it's not at the highest percentage, but 1,300 points could be the most points ever. So percentage is more important than points in my opinion, but the third highest point gain ever. Now moving into Tuesday, we'll see how we're going. I believe the market is still kind of jittering back and forth. Opened up super high. Had some pullback, which I believe is healthy for opening, up 3%. That should pull back a little bit, and we'll see what the traders do in the middle of the day. The last 30 minutes of the day, guys, is when the majority of the trading volume happens anyway. So the last 30 minutes of the trading sessions on all the major indices are what really matters. That's when you'll see the volume levels really skyrocket. Especially on the Dow Jones, the S&P, and the NASDAQ 100. Digressing a little bit. The market, in my opinion, and I've been saying this, and may not have been hitting exactly everything on the head right as far as...
Are you saying you called these shots?
No, I didn't call. I haven't called anything yet. But if you had been putting money into the market when I had been saying to put money in the market, you have so far would have been dollar cost averaging. You've been buying securities at a low. The market is slowly getting higher. Is there a potential pullback in the future? Absolutely, just like there always is.
What would be a reason for that, and when could that happen?
So sometimes there's two catalysts, in my opinion, that are kind of, we're missing a third leg down in the market for a bear market. Not saying we have to have that, because each bear market is its own thing. But that's something that's a cause for concern.
Historically, though, we have had those three drops in the market, and with this
the third drop normally happens after a rally, and it's a retest of the market bottoms. And it's the market, or this, how it kind of goes. It's testing investors' confidence in the market. And if investors can stay strong through that, the market will then rebound, and we are in a new strong bull market. So nobody can say otherwise. It's always safer to say, oh, well, I think the market's going to go down and then it goes up, because when you're wrong, it's in people's favor. So you're going to hear on the news and analysts and everybody say the majority of people are going to continue to preach the woe is me. But you have to be careful about that, because as we saw, Bill Eichmann,
who is Bill Eichmann?
Excuse me.
Who and what?
He's the hedge fund manager of Pershing Square Capital, and I literally was on news yelling about how this is the next Armageddon, and then 2 days later he goes in and buys. I was talking to you.
$200 million.
Yeah, and then a few days later I'm on the phone with you, and he bought another $200 million of a real estate company. So you have to be very careful about headline news. You have to remember all that information they're giving you is old. It's already been acted upon. If they know it and it's them giving it to you, how many other people do you think knew about it before it got to them? So,
especially the people at the top pulling the strings that are benefiting from it most.
Exactly.
And he's one of those legendary. He's known for this, of pumping fear or pumping optimism, and based on that narrative, he goes in backdoor and takes his position, right?
Yeah, normally what he does is his hedge fund will buy enough of a position in a company to where they have a very heavy say, even sometimes a board position. Normally it's at least 5% or more, sometimes up to 10%. And they will try to persuade the shareholders to vote in the same way that they're voting with their shares. And when you own 10% of a company, you have a lot of voting power, and you can persuade a lot of people to do things that you want to do. So that's his MO. That was what they did with Valiant Pharmaceuticals. That's what he did when he shorted Herbalife. So a whole bunch of fun stuff with Mr. Billy Bill. But like I was saying, where I was going with that is he is a huge buyer of equities right now, as a lot of long-term investors are. And 2 weeks ago, I was hearing, don't get in the market, get out, get out, get out, get out, get out, contrary to what I was telling my clients. And since then and now to date, I'm now hearing, if you're a long-term investor, it's a good time to get in, and yeah, go ahead and get back into the market. Start nibbling down on equities, and I've been saying that since the beginning of this. So the thing that you're never going to do is you're never going to time the bottom of the market. Right. Everybody's going to hit it once or twice in their life on accident, but it's very rare to hit that point right out of the gate. But being the statistics will show, and I wish I had the numbers in front of me, but being early on the bottom of the market versus being late on the bottom of the market, meaning you got in before it hit the bottom versus you got in after, you'll still make more money. This whole time the market's going down, you're getting paid dividends. You got in while the market's going down. That means the price on that equity or that position is still averaging itself down. And then on the flip side to that, on the rebound, you're gonna already be holding that position, and when people are dumping their money into it, you're gonna be riding that rocket up versus trying to grab onto that rocket as it's going up. So when you put a market order in and the share price is going up, and you say, hey, I want to buy it at 21, if the offer or if the ask is 21.60, you're gonna pay 21.60, and that 60 cents doesn't seem like a lot, but in 30 or 40 years, that could have been $13,000, $14,000, $15,000. So I'm a big, if y'all can't tell, I am not a bear on the market. I just know that the market goes down, and as a bullish investor, as I am, volatility presents an opportunity to buy, as it does in real estate. That's how a lot of millionaires today are sitting here, is because 2008 happened. I can literally think of 5 or 6 people that were making $100,000 a year back in 2008 and 2009 that now make 7 times that, because they went and bought 4 properties for 20, 30 grand from the bank. So opportunity, volatility in any market normally presents an opportunity for people that are smart to get into that market because it's at a discount. And the same, as I have been saying and will continue to say, is for the stock market. You just cannot be scared and emotional with your money. I know a lot of the listeners on here would
It's so damn hard, and I get it.
is.
I mean, I would be lying if I said I wasn't emotional about my money. I'm sure you feel a certain time, but you go back to your guidelines and your principles.
Well, I just know this exact reason with the market is why there is no live ticker on your home price. They will not allow it. People, if you could see a live value of your home, it would move way more aggressively than this.
Oh, for sure.
Like so aggressively. If you think the stock market is volatile, the price of your home is much more volatile. You just don't get the report except once a year, and because it's been a year, generally speaking, you've ridden out all those waves up. So, it's just, again, lack of financial education, people thinking about their money in an emotional way, which is the way that we're taught and kind of conditioned as we grow up.
Well, that's why we have these conversations, because
Yeah.
at the end of the day, we're all human, right? And
Agreed.
this journey of wealth building, of business, of entrepreneurship, of being just an investor, it is an emotional journey.
Yeah, it
Right?
is. It is. Are you applying those emotions in the right areas and in the right buckets? I feel like you're, in investing in any capacity, anywhere, whether it be in your business, whether it be in an outside business, whether it be investing your money into a company, a stock, a bond, whatever it is, you cannot be emotional because that's going to clout your, you just need to, numbers, math is an exact science, folks.
Data-driven decisions.
If it doesn't work, it probably won't work. If it don't make sense, it won't make dollars. I promise you that. So just remove emotion from your decisions that have to do with anything with your money or investing, and you will most of the time be better. Because I can tell you, and I know you've said and I've said before, our worst decisions have been knee-jerk or emotion-based. And they sound and feel great when you make them. My goodness. Like a hot butter through knife, man. It's a beautiful thing. But on the tail end of it, the 20/20 hindsight, oh my gosh, they're so bad. When they blow up on you, man, it's literally earth-shattering. So keep your emotions away from your money and your investment decisions. You will be better long-term. It's the hardest thing to do. I get that going down. When I looked at my portfolio and it was down 72.9%, Matt saw the picture. It was a little bit not fun, but I had my 5 minutes of, okay, I'm good. And then I went and put $30,000 in my portfolio. So you have to, I have my set of principles. I have my actionable items. I have what I'm going to do when I'm going to do it. And in the face of adversity, I'm going to do it.
Let's talk about the stimulus real quick.
Yeah.
Reports coming out today that Trump administration, some of them are even saying, man, did we undershoot this? Did we give enough stimulus?
Yeah.
Is there more stimulus coming? And if there is more coming, how does that impact and change things? What should people be expecting, thinking about?
I was talking to our analysts, and they predicted that there's probably going to be 2 phases of this. They were probably only going to talk about phase 1 and keep phase 2 under wraps as an additional boost to the economy. 2 phases have likely always been planned. Take this as a good example of it's not what you say, it's how you say it. This is a properly packaged piece of information. So no doubt it was not enough money for people. We don't know what the second is going to be. I've heard a lot of things tossed around. From what we're guessing, it's going to be more direct cash to consumers.
Not as much business stimulus.
Small business and consumer focused. So little guy focused versus this time
1099, solopreneurs, sole proprietors.
Yep. Because those were the back end on this one. So that should flip-flop in the front end. Do not be surprised if there's a lot of money for big corporations, though. Big corporations will always, in the U.S. economy, unfortunately, even over human life a lot of times, get the what am I trying to say? Like
they'll get preferential treatment.
Yeah, exactly. Because like I was saying to Matt the other day, we have conversations throughout the week, FaceTimes. Sometimes he has something for me, I have something for him. I had to say this, and it was just like, it sucks to say, but I was saying, if you think that the U.S. government will pick the health of 100,000 individuals or even 200,000 individuals over the health of the U.S. economy, you do not know our government, because they will not. They will not. They absolutely will not. They will let people. They will happily accept 100,000 people dying.
So let me touch on this point then. If that is the case, which I believe to be true as well, right? The government is absolutely going to be willing to sacrifice really whatever is needed for quote unquote the greater good, which is obviously rooted in economics.
Correct.
And
in a capitalist economy, it always will be.
In a capitalist economy, absolutely. So then if they are doing what they're doing right now and putting the stress onto the economy and everything that's been going on, is this, they obviously see this health scare as something extremely critical and dangerous, right?
As far as the U.S. government does, or
right? Or I guess the question I'm trying to get around to is in the sense of, why are they issuing all of these shelter in places and essentially stalling out many aspects of small business and the economy if they really don't care? And we're still the largest country that hasn't done a national shelter in place. I mean, in some updated numbers here today, as I look at the COVID dashboard, United States number one most confirmed cases in the world at 377,000 as of April 7th. The closest country to us is Spain at 140,000. They're not even half of what we're at, and our increase in cases is still spiking right now, more than any other country. So we still obviously have some room for this to play out. I guess the concern that I have is how long do we not get back to business? Like, how long do we allow this pause button to stay on the U.S. economy?
I'm still pretty certain in the next 3 weeks things will open back up.
So you think,
I'm sticking
you
to
think
my
the
guns
April
that
30th?
Yeah, and I think it's actually going to be fine before then. They're going to stick to the April 30th. You have to remember, federal government still has not put a national shelter in place, and only states have. It's been left up to states. Holy crap, did you see Florida? That was a little aggressive. I think the federal government should have stepped in, especially with the geriatric population there. My gosh, that's an older population. But that's, again, why states are allowed to govern themselves within their own borders. I am very confident in the next 3 weeks. I don't want to say that to piss people off. I'm just telling you guys, I'm data driven. I'm just following what the market is telling me currently. That can change daily and weekly, but currently speaking, it looks like everything is going to open back up. All the medical examiners in the United States for health and life insurance, minus in Southern California, to my knowledge, are examining as of yesterday again. Those are people going to take body fluids out of people in our state, which I would argue is one of the more liberal states, consumer focused and consumer protective. So I'm just following. I'm using some technical analysis. I get that, everybody needs to be safe. Vulnerable populations, young children. Wash your hands. Don't do like I've been doing and touch your face. I just have a little itches. Sorry, guys. I'm touching my face. Don't be touching your face.
Marie's been kicking my ass because I've been biting my fingernails since I was, I don't know. I can't even remember.
Going, man. But yeah, it just, do what you're supposed to do. Once we make it through this, guys, for everybody that doesn't have an emergency fund, 6 months. 6 months at least for you to not make any money and pay your bills. This is why we do it.
Yeah, if you were ever to build a new practice or discipline out of this crisis, it should be how you manage and maintain and operate your finances, right?
Absolutely.
So important. And speaking of finances, a big story right now, shifting over to real estate, is talking about mortgage forbearance. And
guys, do not make the mistake.
So let's talk about this for a quick second, because there's been a lot of reports, there's been a lot of headlines about, is this a mortgage crisis waiting to happen? Is this like 2008 all over again? And I know what my take is. I want to hear what yours is. For those that are thinking about mortgage forbearance or doing mortgage forbearance, what should they be taking into consideration, and should they be doing it?
First of all, before I say anything, my mortgage is $3,600 a month, and I paid it early, like 2 days ago. So I want to get that out right now in the open, because I'm gonna walk a little bit. I want to make sure you guys know that I'm talking as well. My lender offered me already in that, hey, you don't got to pay for 90 days. 90 days. I could take that money and go put it somewhere else. Absolutely, I could. I don't need to. I just don't need to. And a lot of you listening need to, and a lot of you listening do not need to. And a lot of you people that don't need to know that you don't need to, and you're going and you're applying for it anyway, which is creating a drag on the system. So instead of helping the problem, you are now becoming a part of the problem. And then the flip side to that is a lot of you people that maybe don't need it, or you do need it, you don't understand how it works. So let me just go ahead and make sure that I burst your bubble before you create one and it bursts on me. You have to pay your mortgage in my example, let's call it 3 months of forbearance. You will have to pay all those 3 months, less interest most times. So in this example, which is not guaranteed to be accurate to your loan or lender's terms, so check with your lender or your loan servicer.
Mm-hmm.
Let's say your mortgage payment is $1,000 without interest. $1,000. So you are going to defer $3,000. And then let's say with interest and everything else, it's $1,500 on month 4. When month 4 comes around, you have not paid your mortgage for 90 days. Your mortgage will then be due on the 1st by the 15th, most likely, for your lender, or it will be late. They are going to ask for not only that $1,500 for that month, but the $1,000, $2,000, $3,000 on top of that immediately. There will be no, this is all due. You can be late on this, massive fees late on that, because you've already deferred it for 90 days.
So a lot of people are thinking, hey, if this forbearance, they're gonna tack it on to the end of my loan, or they're gonna forgive it, and they're mistaking it for
absolutely not
a true concession.
It absolutely will not happen. That's not what it says. That's not what's going to happen.
And what is the issue with that?
The issue with it is what's going to happen is scaring me, because a lot of people, which is why I have a job, don't understand money. So they're going to say, wow, I'm going to not pay my mortgage, and then I'm just going to pick up the mortgage payment in 4 months. And instead of taking the $1,000, they're going to and save it, which nobody does. They're going to take the $1,000 and spend it on shopping, or run it up on a credit card or something else, because, out of sight, out of mind. And then that 4th month is going to come around. All of this is going to come due, and the majority of the people are not going to have the money to do it, so they're going to miss those payments, and that's going to cause defaulting, and that could cause a mortgage crisis. So that's what bothers me. So just be smart with your money. I mean, gosh, if you cannot read the fine print of a stimulus act that has to affect your mortgage, you shouldn't have a mortgage. And second of all, when you make decisions that have to do with a monthly payment, the most expensive asset you likely own, and you'll just fly by the seat of your pants and make a decision, you're just being irresponsible. And that type of stuff is what 2008 is. It's an irresponsibility at its finest. It's no income, no job loans, teaser rates, pop-up rates, variable interest loan rates with no cap. I mean, it's the most aggressive type of corporate greed with retail and consumer, just blah. And when you mix those two together, that's a deadly combination. So I don't see any greed here. I think that for people that need to kick the payment back 2 months because they're furloughed, this is a wonderful thing for them.
Absolutely.
They should be responsible enough to bank those payments. Do not forego your mortgage if you are not going to bank those payments away, because you will owe those payments in month 4 under my example.
You're just kicking the can down the road, and if you don't really need the forbearance,
don't do it.
You're not under true financial distress, then don't do it. It's like if you're out swimming in the ocean and there's 100 other people around you and the dude next to you is drowning and the lifeguard rolls over and he throws out the life buoy and you're the one who swims over and grabs it, you're not doing anybody any good. And so I just really think, again, when you think about the domino effect that this could have, are we in a financial crisis? You sent out an amazing email to all of your clients and offered it to all of our Millionaire Mindcast listeners. And if you're not on our newsletter, head over to millionairemindcast.com. But one of the things that you mentioned was this isn't a financial crisis. This is a confidence crisis. And the whole aspect of psychology and fear and the manipulation of mindset and how consumers will be different coming out of this, is something that we're taking into account from that perspective. But it's also how people are navigating business, navigating finance. It's having an impact there. And one of the negative impacts that it could have is, again, people not following through and upholding their responsibilities and taking care of their liabilities. And whether you're a mortgage holder, and this is a direct impact on the single family market, whether you are a tenant and you're not paying your rent, right? The system is based on everybody upholding their responsibilities and covering their liabilities. And this is one of the things that I was talking with a lot of my commercial retail tenants, going, hey, we're willing to work with you if you are truly under distress right now. You got to prove that to us, and you got to fill out this application. And once we know that, we will work out some type of payment plan with you and work through this, because we're all going to get through this together. But if you're just asking for a handout because of what's going on, but you're financially okay, no, because me servicing my debt and my liabilities that you run your business out of, this asset that I need to take care of, part of that is taken care of because you uphold your liabilities as the tenant, right? And so whether you are a single family tenant and you're not paying your rent to your landlord, that puts financial stress on the system. Whether you're a commercial tenant, financial stress on the system, which then could knock over a larger domino that becomes a financial crisis.
Yep.
But to shift a little bit on what my thoughts are on the real estate market, just some quick updates for you guys. Number one, you should be paying very close attention to the data right now. Data, one, you can get most of it from your local MLS on a micro perspective, and paying attention to things like days on market going up with the houses that are on the market, inventory going up, the supply spiking because people are worried about cashing in on their equity and pulling some cash off the table. Or you're going to start to see notice of defaults go up. You're going to see notice of trustee sales and more houses being auctioned off. You're going to see some financial distress that does come from this. We're going to see supply jump. You're going to see demand drop. You're going to see it decline. And here's the reason why. One, just from this whole coronavirus over the last 30 days, almost every MLS that reports to the National Association of Realtors has recorded somewhere close to a 50% drop in demand. Part of that is obviously because people can't show houses and open houses are cut, and right, there's restrictions due to COVID. You're also going to see, because of what's happening in the mortgage industry and the volatility in the stock market, a lot of the lenders completely hit the pause button. So you're seeing products completely eradicated. They are no longer lending out on certain products. You're seeing people's requirements for their credit score be increased, the amount of reserves and cash on hand be increased, fees change, all kinds of structuring and terms and rates that are shifting right now. So you're going to see demand naturally get cut because, one, half of the people that wanted to qualify and take advantage of low interest rates in the market where it was at no longer can qualify for certain products. Then you're going to see the people who maybe lost their jobs or worried about losing their jobs or maybe worried about losing some income go, I know the market is doing something right now. I don't know what it's doing, how big of an impact it's going to be, but I feel like I'm trying to catch a falling knife. Maybe I should just sit on the sidelines, wait for this to pencil out, wait for the dust to settle, and then figure out where I'm going to come in at. And so you're going to see those individuals start to sit on the fence a lot longer. So demand and supply are things that you should be paying attention to. Of course, days on market, inventory, whether price per square foot is dropping, whether the absorption rate is increasing or dropping. Absorption rate meaning how many new houses are hitting the market and how many are actually going pending and sold, which just tells you how many houses are being absorbed, really your demand, right, into the market. So those are going to be things that you really want to pay attention to. And if you're a buyer right now, personally, I'd pause. I would wait for all this dust to settle, because I've been using this analogy of the coronavirus atomic bomb getting dropped on the horizon, and you're 10 miles away and you just saw that big ass explosion out there, but you haven't felt the aftershock yet, right? The ripple effects of that explosion haven't necessarily worked its way into real estate yet. So buying right now, in my opinion, is not the best time. So if you're in an escrow, kick it out, because the seller's not going to really have a whole lot of other options. If you are thinking of buying, just know that in the next 6 to 12 months, there might be some great opportunities and some more selection, some more inventory for you to negotiate a better deal, a better price.
At a lower price, too.
At a lower price,
And
absolutely.
unless your rates was locked in, man, we're getting to the point where almost all rate locks are going to be dropping off that were any good.
Yeah, well, as of right now, the big banks are not allowing a rate lock until you are cleared to close.
I'm talking about people that locked 30 days
Oh,
ago.
yeah.
On day 27. Don't let your real estate agent and your lender pressure you. Like, rates are never going to go back down. It's just, they will.
Yep.
Just when things calm down. So don't let that be the catalyst to buy, because that's not going to be your forever home anyway. So don't worry about the rate so much.
If you're a seller right now, and you really do have to sell in the next 6 to 12 months, sell yesterday. Call your agent and get your house on the market as soon as possible.
Contact some investors too, because honestly, investors, cash buyers that are floating in cash, they're going to give you a very similar offer, and time value of money is really of the essence right now. So even if it's 20 grand difference, if you can sign the papers and get the 20 grand, you have zero risk of losing that additional income due to something happening in 9 days that wasn't happening today. So contact cash buyers. There's a ton of them going on right now. People that are thinking about, the only thing that I could think of that would be good, a lot of people downsizing, like retirees.
Yeah, to add to that though, a lot of cash buyers aren't buying right now.
Yeah.
So
that's correct.
Just to add to that real quick, so you got Zillow, you got Open Door. Pretty much every large institutional iBuyer right now, hedge fund, is paused on the sidelines. Some of the other funds that I've been working with and that I know of that have been actively pursuing single-family product and larger commercial assets, the ones that aren't sitting on the sideline, and again, I would say about 60 to 80% of them are legitimately on pause right now. They're just waiting. They're like, hey, we're going to let this, once shelter in place is lifted and once we kind of have a clear idea of when things are getting back to normal, then we'll get back in.
I know 2 people.
You're still seeing a couple. I'm buying still.
I was going to say Temp and Devin Burr and Templeton Walker.
They're buying
out in Arizona.
Ryan,
Shout out to those guys.
Ryan Pineda's.
He's buying.
Yep. So there's still a lot of people. There's opportunity, right? A lot of the competition going off to the sidelines. The adjustments that you should be making are discounting your offers drastically. So instead of buying at, dude, you're rubbing my knee right now. If you, a lot of the people you were going up competition-wise against are on the sidelines. Yep. So if you can discount your offer and people really do need to sell, because there are always people that need to sell, people going through probate, people going through divorces, people inherited properties that are vacant right now that are carrying a mortgage that want to sell yesterday. Right? Yeah, people like that. So there's always going to be opportunities out there. You now just need to adjust your offer accordingly. So instead of buying at 75 cents on the dollar, we're offering at 60 cents on the dollar. Mm-hmm. You make your adjustment knowing that the leading indicators of what we see right now, which are things like unemployment, like policy, like politics, like the stock market, tell us how they are going to lag into real estate and show up potentially. And therefore, if you can take and assess those leading indicators and make your offer discounted enough to have enough baked in margin, enough hedge on the risk, and you can exit it before those lagging indicators show up in the real estate market, that's where you can create some opportunities on a short-term basis. And then if you're also buying long-term, right, just making sure you're buying smart, you're buying for cash flow, that things pencil over the long term. But my prediction on the housing market over the next 60 to 90 days is I have no freaking clue. And here's the thing. I still think it all comes back to this big X factor of when is shelter in place lifted from a national perspective? When is this stay-at-home suggestion turn to let's get back to it, guys? Now is the time for us all to band together as an economy, as, team human, and we all get back to business, our jobs. And if patronizing your local restaurants, when people feel confident in that, that's when I think we're going to start to see things pick up again. But until then, I think we're on a really slippery slope, dude. I really do.
And if you subscribe to, first of all, subscribe to this podcast. But second of all, if you subscribe to my train of thought, if the market is going up by 5-6% and we're not buying in businesses, I can't wait to see what happens when businesses open back up. And don't listen to these pundits on the news saying that they're not confident that the U.S. consumer will immediately go back and buy. That is a load of BS. I know, I want to go do all the stuff that I used to do. I'm literally going on grocery shopping dates with my wife right now. And buying eggs from 7-Eleven. Here's what I will tell you. If I am right, which I have been pretty right so far, and if I am right and the market does subside and business opens up the next 3 to 5 weeks, y'all are going to wish that you listened to me a month ago, because the market is not only going to take off, it is going to leave you in the dust. And you will be so late to the party and miss out on so much earnings, it's not even funny. So, with that being said, nobody knows. Yeah. And nobody has a crystal ball, and it changes daily. So, make sure, like Matt was saying, I completely agree. If you're a buyer of anything, especially of commercial, stay away from. Yeah. But especially residential right now. I even heard my buddy Jack Cancel talking about this. This is some investors are ready to buy it from him. It's a transaction that's going to pay him. Hold off. Why don't we just hold off right now? Because it's not the best thing for you to do. Why don't we go ahead and kick the ball 3 to 4 weeks down the road and see with a little bit more clarity what this is going to do? Because as Matt is saying, there are leading indicators that have already done their job. They have marched their march. We now have lagging indicators that are going to catch up and tell us what these did, what was that effect. So we need to wait until that effect is noticed in order to really make those actionable decisions like we were talking about. Because for a lot of you guys buying residential real estate, that is going to be the most expensive purchase you ever make in your life, and it's going to be a leveraged purchase. So you need to make sure that when you make that most expensive leverage purchase, that it's a smart one and it's done with a lot of wherewithal and a lot of reason behind it. You're going to be kicking yourself if you could know in 2 examples, A, I pulled the trigger immediately, or B, I waited. And in B, I waited, I saved $75,000 on the price of my home that in 2 years was back in my pocket via equity. So you just have to be really smart. And fortune favors the bold, I agree. But also, smart money is where the money is made. Yep. So be smart with your money.
Yeah, now's the time to be patient, again, to skill up, to get connected to the people who've got the results that you want, have been through this before, who can give you a little tip of the hat of what you should be looking at or shouldn't be doing or should be thinking about or should be avoiding, and just doubling down on those relationships, because this is where strategic and key alliances are built, where they're strengthened, where you might get tipped off to an opportunity that completely changes the trajectory of your financial plan, your wealth plan, your lifestyle. Right now, again, is where a lot of people are contracting, And when I say expansion, it doesn't mean you need to be putting a bunch of money into, this or investing in that. What I mean expansion is expanding your knowledge, expanding your skill set, expanding your resources and the opportunities that will come from practicing and doubling down on a lot of those things. So right now, if you're not involved in our community, you haven't said what up to us, first and foremost, you got to text me 844-447-1555 if you have a question that you want us to answer on the show. Head over to go.millionairemindcast.com, get entered into our monthly contest giveaway, and be sure to check out more details on our upcoming wealth camps if you want to hang out with this dude, this wild guy.
At our cabin.
At the cabin up in Lake Tahoe, or our future wealth camp events, details to be released here soon. Just text the word wealth camp to 844-447-1555, and we'd love to talk more about having you at one of our intimate events, max 10 people. You really get to know these individuals. We get to have some awesome fun and experiences, and most importantly, you get to walk out of there with a true roadmap to how you're going to accelerate your wealth plan, achieve the financial goals that you want, build the freedom, the security that you desire for you, your family, and again, doing it while having a lot of fun. Yeah. So with that being said, be sure to tune in next week. If you're watching this on YouTube, say what up. Drop a comment below. All of the resources, as always, are going to be in the show description or in the show notes at millionairemindcast.com. And with that being said, tune in next week. There's going to be a lot to cover.
Yep.
This is going to be a big week because they're talking about this being the spike of everything that's going on. I'm praying, fingers crossed, that we turn a corner here. We start to see some positive things get discussed and talked about in the media, and Mr. Breedwell is going to keep digging into the data for all you guys to keep you at least armed and equipped to navigate this roller coaster that we're on. So share this episode. Hopefully you guys enjoyed the value from today. We'll see you guys next week. Well, that wraps up this week's episode of Wealth Building Wednesday. Hopefully you got some great value from that. And if you did, be sure to share it with somebody or leave a review and whatever platform you enjoy listening to this content on. If you're not subscribed on the YouTube channel yet, know that we have all Monday, Wednesday, and Friday episodes now via video on the YouTube channel. So be sure to subscribe to the channel. Hit that like button. If you're watching this video on YouTube, drop a comment below or just text me at 844-447-1555 and say what up. Let me know where you're tuning in from. Also, if you have a question that we didn't answer, you want us to answer on future episodes, head over to go.millionairemindcast.com. That's go.millionairemindcast.com. And just by entering your question, you're going to get automatically entered into our monthly giveaway of over $1,100 worth of prizes. That's courses, books, planners, gift cards, coaching calls with me. And speaking of coaching, if you are looking for a mentor and you want to work with somebody one-on-one to scale your wealth, to scale your business, text the word mentor to 844-447-1555 to learn more about what it would be to set up a coaching discovery call with myself. If you want to attend one of our upcoming wealth camps, text the word wealth camp to 844-447-1555 to get more information. And be sure to check out therichlifeacademy.com for all kinds of additional free and paid resources and community options for all of our listeners. With that being said, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers, my friends.